us. And joining us in New York this evening is Daniel Rosen, who's a principal at the global economic think tank, the Rhodium Group. And Dan previously served as senior advisor for international economic policy on the White House National Economic Council. Dan, thank you so much for joining us during your Monday evening. So let me just get your thoughts first off on the meeting between Hu and Obama. We don't really know that much in terms of what was discussed, but, you know, I guess your expectations for this meetup, which was highly anticipated.
Well, the first thing that's worth saying is that the meeting happened at all. Just a week or so ago, we weren't sure whether Hu Jintao was going to be able to put this on his schedule. The fact that he's in Washington, that he met with the president for 90 minutes today, by itself is excellent news and is a great starting point for the meeting happening this week in D.C. We do have a little bit of a sense of what went on in the 90 minutes between 2:30 and 4 o'clock today in Washington. Certainly the leaders talked at great length about the nuclear issues they're getting together to discuss, but certainly they did also touch on currency at least and other issues to do with economics, including market access in China for American firms.
Dan, well, take a look and take a listen, actually, at what the Chinese side had to say about this meeting.
President Hu said to President Obama that sound and stable developments of China-U.S. economic and trade ties is good for China, good for the U.S., and good for the world economic development.
Okay, sound and stable developments of the trade relationship. Dan, what do you think that means? Do you think that means a stronger yuan?
You know, we've had sound and strong relations with China for some time. I think that the unusual moment has been the past 3 or 4 months when the working relationship over the currency got a lot feistier and testier than it had been for years preceding that. I think the fact that the Chinese described the bilateral today the way they did, the fact that Tim Geithner, Secretary Geithner, was comfortable delaying the currency report until after these meetings took place, shows that both sides are getting back to a working mode with one another, including on currency. I think most people expect that we are going to see some move from the Chinese side on the currency, not because of pressure from the U.S. or anybody else, but because it's in their own basic domestic macroeconomic interest to do so.
Okay, is it really in the best interest of China? Because we've heard hedge fund managers, Jim Chanos, saying that China's, basically the property sector is overinflated right now, and a stronger yuan might not help in terms of this bubble growing, and possibly bursting. And we actually heard that echoed yesterday by an MIT professor.
Well, unfortunately, Mr. Chanos, I think, has it wrong. One of the reasons why there's so much overinvestment in property in China is that the currency hasn't been appreciated to date. A stronger renminbi is going to mean more options for Chinese households to invest their money at a better rate around the world in other kinds of things other than just property in China. It's going to give China's central bank the ability to manage growth in a healthier way that's supportive of a broader domestic demand growth for the People's Republic of China. So I think the currency is part of the essential combination of policies both in China, the United States, and others that'll be part of a strong global outlook for some time to come. Further, we had a big Chinese trade deficit in March for the first time in 6 or 7 years. One of the biggest reasons for that is the price of commodities starting to go up again. China's a giant net importer of commodities. A stronger renminbi is going to mean cheaper commodities for China, which is very much in its interest.
Daniel, we're running out of time here, but let me just quickly touch on this nuclear summit. You actually don't think the yuan and economic issues will overshadow what needs to be discussed in terms of the proliferation of nuclear materials?
You know, I think actually it fits together pretty nicely, Susan. We're in Washington today to talk about nuclear security. But let's remember that the country that will be building more new nuclear power plants than the rest of the world put together in the decades to come will be China. China has both an economic interest and a geostrategic interest in having an international regime for nuclear materials that will prevent us having to slow down the entire supply chain for nuke so that they can build up a new component of their energy sector, meet their needs without having to buy every possible oil asset on the block around the world, no matter what the price,
aren't they?
as you've been also talking about today with the Syncrude deal.
Yeah, Daniel, nice talking to you. Thank you for sharing your time. That's Daniel Rosen of the Rhodium Group.